Hey guys, Patrick here. It is December 6th. I'm a little bit behind schedule getting the November market report info out to you, and that is largely because of technical difficulties. Spoiler alert, I don't really know what I'm doing with all this stuff. My microphone, I don't know what happened, but it conked out. So my buddies over at Long & McQuaid are currently taking a look at it. And so my other buddies over at Davidson Delot have loaned me this microphone. I don't really know how to work this one either. It's all plugged in. The levels look okay. But if they're not, hey, blame me or the sound guy. So rather than do a large, grandiose macro market look at the Niagara real estate market, I thought it might be more interesting to just look at 10 quick facts about what's going on out there. Maybe give you a different perspective on things. And again, we can sort of chop through them, but I think they'll give you a lot of information on why things feel and why things are behaving the way they are right now. Again, here on December 6th, we can largely call it like the year is pretty much done as far as the overall activity is going. It's sort of like the bottom of the ninth with 2 outs. But so anything year to date is more or less the year. But anyway, I will reference, up to November or year to date, whatever. And let's get going. Okay, so first off, new listings in St. Catharines in November. Number one, stunk. The worst November we've had on modern record. Our system really goes back to 2011. You can go back further, but for certain pieces of data, you can only go back to 2011. So again, November 2021, the worst November on record. Case in point, there was 333 active listings November this year. 3 years ago, 2018, there was 681. Yes, that was a different market. Days in the market back then were up in the 45 to 55 days range. Now we're sitting at 21, I think it is year to date. But right now the market's sitting about 12 to 14 days in the market. So again, longer days in the market means more active listings. So that's why it's more than double 3 years ago. But still, it's worth noting that's why it feels so strange, because the number of active listings on a day-to-day basis are so much lower than normal. Second thing, Niagara Falls, absolutely horrendous new listing inventory. 5 consecutive months of double-digit negative territory. Hey, Pat, what's that mean? So if you look at August 2021, for example, compare it to the average for Augusts going back again a decade or more. How did it fare? How did this year's August fare against the average? So July down 14%, August down 22%, September down 24%, October down 10%, and November down 15%. So that's 5 consecutive months of being down, between 10 and 24%, month in, month out, month in, month out. Meanwhile, sales demand is still there. So what happens? Escalating prices. That's why Niagara Falls is averaging over $700,000 right now for the entire market. Because it just clamped down and clamped down and clamped down, and it's escalated or compounded month in and month out. Number 3, sales volume. A huge year by all accounts. Currently, the complete year record is 2016. It had 9,156 homes sold. That's the current heavyweight champion of the world. Second place was 2020, that had 8,778 homes sold. So where's 2021? 2021 is already first place. If the year ended right now, it's sitting around 9,670 sales, on pace for 10,200, give or take, sales. So this will be the first time ever that the Niagara region has surpassed 10,000 homes sold in 1 year. So that's a bit of a big deal. Item number 4. Myth that the data from new homes sold artificially inflates the overall sale price or the overall picture of what's going on when related to new homes, resale homes or older homes. Case in point, Thorold. It has a lot of new builds, down the south end, southeast, up the east corridor, even in Confed, there's new builds there. When you look at the total, the average sale price for all residential so far this year is sitting around $649,000. When you take new construction out, it goes down to $642,000, so all of 1% difference. So it's not the impact. And yes, you could argue that not all new construction goes into the MLS data, that not all new construction goes to realtor.ca. A new build site has 28 homes and only 7 of them go on MLS. But for the data that feeds our system, new builds don't always have the impact that you might think. Number 5, listings right now in St. Catharines. So if you look at the meat and potatoes of St. Catharines, detached homes between $600,000 and $800,000 is where the largest amount of activity is happening. I know you think I'm crazy, but that's where it's at right now. Right now, there's only 19 active listings for sale. 7 of them are doing offers in the next 3 or 4 days. So that's an outrageously low amount of inventory. And when you look at those other 12, so there's 19 in total. 12 of them are doing offers anytime. Those ones, the average days in the market for those is more than double the market average. Right now, the market average is around 13 or 14 days. Those 12 listings that are active right now that are willing to look at offers anytime, you go and look at it today at 6, you make an offer at 7, off you go. Those 12 average days in the market is sitting around 31, 32. So, sometimes there's opportunities in those items that stay on the shelves longer. And so it's worth taking a look at. Number 6, $1 million sales. So historically, you go back 5-6 years ago, the number of homes sold over $1 million were, about 0.5%, 0.7% of all homes sold in Niagara. Every year that's jumped up, doubled in some cases, to where 2019 it was about 2.5% of all sales. 2020 it was about 4.9% of all sales. Here we are in 2021, 11.5% of all homes sold in Niagara this year have been $1 million or more. I know, spoiler alert, you already probably guessed that, but it's now about 11.5% of all homes sold, which is astonishing. It used to be, largely Niagara-on-the-Lake, a little bit of Grimsby, a little bit of Fonthill. Now it's across the board. We're seeing homes up into that price range. Pricing, you say? That's number 8. So right now, this low supply and high demand has produced, pricing we hear like, that sold for what? Or holy crap, are you serious? How did that get that much? We see it was like once in a while, and now we hear that all the time, to where you almost become numb to it, right? You're used to these jaw-dropping sale prices that are going on. So, case in point, across the entire Niagara region, every city in the Niagara region is up 25 to 30% for average sale price 2021 versus 2020, except for our 2 lower volume markets. Niagara-on-the-Lake is at 18% for this year versus last, and Fonthill is at 20% for this year versus last. But again, otherwise, every city is 25 to 30% up. Fort Erie's up 30%. You know how wonky it is? St. Catharines is now the second lowest average sale price city in the entire Niagara region, only ahead of Welland, which is still creeping up on 600. Welland's the only city not over 600,000 at this point. It's 586,000 year to date. But again, St. Catharines, the second lowest average sale price city in the entire Niagara region. Bet you didn't think that was the case. And then 9, speedy market. So historically, we have this new, it's hard to explain, we have this new piece of data that's called cumulative days in the market. So when somebody lists a house for 8 days, cancels it, puts it on for 10, cancels it, puts it on for 22, and then sells it. In the old system, it would only count that 22. Cumulative will add up the 8, the 10, the 22, and give you a 32, 40 days in the market. So it's a more honest tell. We've only had that piece of data for 5 years, but it's a way better representation of the reality of it, right? Rather than if somebody's taking it off, putting it back on, trying to keep those days in the market numbers low, you can't do that anymore, which is hooray, great. So since that's been kept, it's really only 5 or 6 years. This year is tied for the lowest days in the market on record at 21 days. That's tied with 2016, which was an absolute monstrous year. Flashback 2 years ago, 2019, it was 55 days in the market. Funny how quickly things change, eh? So that's number 9. Lastly, number 10. What happens next? I don't know. But all we can do is go on historical experience and what we've seen. And January and February is always a really good indicator of where the year is going to go. If it starts off strong, does it start off sort of nervous? Is it standing out front of the store, kind of scared to go in? Or is it smashing the door down and saying, all right, let's do this? So once we get into that sort of 3rd week of January, 4th week of January, we'll have a better flavor for things. But we don't expect to see any large shift in any direction. If anything, we'll probably see the same dynamic carry on through for the next 3 months. And then the spring market, that's where we got to see when we get to, because spring markets behave in different ways every year. But it's typically when most homes are listed and most homes are sold, is that March, April, May time period. So that will, be a huge determinant. But I can tell you this, if somebody's sitting on a detached house and they're not sure where to go, it's a really good time to figure out where you want to go. If you're going, from a detached to a condo, or you're going detached to a rental or a senior's home, or you're moving out to whatever area, the timing is excellent. That being said, you can still go from your detached house over here on this street and sell and buy that one over there. You can still do it. All that's changed is the numbers attached to them. Before maybe you sold for 320 and you bought for 440. Now you're selling for 620 now you're selling for 620 and you're buying for 740. Those numbers don't make sense and they're kind of scary, but the ratios largely have maintained themselves if you're buying and selling in the same market. If you're only buying in the market, yes, it's difficult. It is really hard to get in. But again, the market behaves differently depending on how you're looking to interact with it. Are you selling? Are you buying? Are you buying and selling? Are you moving out? Are you moving up? Are you moving in? All that kind of good stuff, right? So that's where a good realtor comes into the equation and helps you navigate and get through everything. Speaking of this webpage, that's our market insight page on our website. I'm going to put a link down below this video. You can go there anytime. We update pricing, number of new listings, number of sales on a routine basis. So it's a good way to get a quick snapshot of what's going on in the market. Our blog page, we always put up blogs there. You can go and check those out. Again, I'll put a link to that page down below. Market intel, just interesting stuff, stories, data, all kinds of sort of a bit more of a mixed bag as far as that goes. But yeah, that's 10 things about the market. I hope you found it interesting. If you have any questions or you have thoughts or you want to add an 11th thing to the market, by all means, you can comment or reach out anytime. Always here, always happy to chat. Okay, thanks so much for joining me. I tried to do that as quick as I could. It was not 4 minutes long, but hey, what are you going to do? Okay, thanks guys. Take care. See ya. Bye.